Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me is Hiral Daria. Morning, Hira.
Good morning, Alex.
So we're looking at the equity markets today and we're noticing that there is very little news flow and there is also a lack of an overarching cue or direction. But there's a lot of individual stocks that are likely to be in focus. There's a lot of stock-specific action that we could look forward to.
Absolutely, and that's been the trend as well, Alex, over the last couple of trading sessions. If you see the last 4 weeks itself, the markets have been in a consolidation phase and we've constantly ended in the negative as well. Though the underlying tone itself is not giving you as bad or as negative cues in terms of over the long term. What's interesting is to see is how yesterday's session also panned out, because it was a gradual recovery that we kept seeing and we nearly ended at the day's highest levels, not at but near day's highest levels. So interesting moves that did coming in yesterday's session.
You had almost even Stevens at the start in the first couple of hours, at least on the Nifty 50 in terms of advances and declines, and you only had about 8 or 9 or 10 declines towards the end of the session, most of them advanced. But one of the big stories, of course, was the decline of JFS as well as Reliance Industries.
Absolutely.
Subdued listing.
Absolutely. So these were two stocks that are in focus. But clearly, from a sector perspective, it's been IT as well as the metal counters that did outperform in yesterday's session. Apart from that, if you see in terms of the market breadth that Alex was mentioning as well, the breadth has been positive, and that's something which is actually portraying a robust market sentiment as well. Now, as long as Nifty is holding above those 19,320 levels, the bullish sentiment is something which is expected to continue, and it's holding at its 50 DEMA as well. Now, if you talk about the FPIs, since Friday, they have been covering their short positions. And if you see the long-short ratio, that has moved from 39.46 to almost a 42% overall to the 17th of August. Now, moving to Bank Nifty, the resistance is at 43,250, and this is on an intraday basis that we're looking at. Now, it closed almost 151 points higher. We have seen short covering at 43,800 and 43,900 strike. And from here, that's the reason why we've seen that strong up move that did come in terms of Bank Nifty as well in yesterday's session. Now, clearly, last couple of trading sessions, 43,700 to 44,100 is the range where Bank Nifty has been consolidating as well. And this is nearly for 5 consecutive sessions. So a decisive breakout on either side will actually help us understand and provide cues in terms of what direction Bank Nifty will take as well. So clearly, if you go to see that consolidation phase is something which is continuing, Alex, but where from here on? Because there is that indecisiveness that continues to prevail in the markets, and the terrain seems absolutely wobbly.
No, certainly. And I guess if you zoom out and you look at the global context as well, then you'll see similar scenes playing out. Though overnight in the US, you saw tech stocks rallying, and you saw the NASDAQ as a result that gained over 1%. The Dow was a bit subdued, but the S&P 500 gained about 0.7%. It's a bit of a mixed start in the Asia-Pacific region as well. And on the global stage, of course, you're looking forward to Jackson Hole at the end of the week in the lack of any other cues. But we've got an interesting chat lined up. We've got Jaspreet Singh, who is the Chief Investment Officer, Research and Ranking, joining us. Jaspreet, thanks so much for joining us this morning, and good morning to you. How do you look at what is prevailing right now in the Indian equity markets? Are you seeing any trends, or is there a complete lack of an overarching trend as we were looking at? And therefore, what are you focusing on?
Hi, good morning, both of you, and good morning to the viewers. And thanks for inviting us. So I think I'll go with your premise here. There is a lack of overarching theme or a trend here. And it's getting very, very stock specific, and you'll, in fact, earlier it was more a market direction, then it was going into sectors, themes which are doing well, and now over the last few days it's gone even deeper and it's been very, very stock specific. So I guess that might continue in the near future, because clearly there doesn't seem to be any big drivers in the very near term, and when I say that I mean the next 2 or 3 months. And at the same time, there are no big hurdles at the same time. So be it interest rates, inflation, the crude, any geopolitical, good or negative news, there's nothing one can really point out that this is going to be a road breaker, or at the same time this is going to lift this thing. The good thing, the one shining spark that I can clearly see and may want to highlight is the quarterly earnings at an index level, Nifty 200, Nifty 500, that continues to give a ray of hope. So even the top line growth, let's say for the last quarter, first quarter of this financial year, was in high single digit. But the net profit growth was clearly 20, 25, 30% on a YOY basis higher. Any index you look at it. So I think that's a ray of hope, and if that continues, there's no reason to believe we should have any thoughts that over a 1 to 1.5 period the markets should trend only up.
Right. Jaspreet, point well taken. And as you mentioned that, yes, it is a stock pickers market, but clearly, investors want to invest in the market at current levels. But the key issue comes up is when they complain of the valuations. Where do you see the valuation in terms of the Indian markets right now from an investment perspective as well?
Sure. So, before I talk on valuations, I think the one thing that I hear continuously is or frequently, and we read often is that we are, closer to 1 SD or, 2 standard deviation, etc., versus, let's say, a 10 or a 20 year. So my limited point here that would be, we've never been in this dominant position ever in that, 10 or 20 year past, by which I mean, let's say, the facts, right? We are the 5th largest economy in the world, growing at 6.5%, 7%, by far distant versus the number 2. The whole world is watching us. And India Inc. is growing, still growing at its best with a deleveraged balance sheet, right? And per capita moving up significantly. So with that, all that context in mind, the mean or the averages will go up, and the current number will go up. So even if I take a 20x Nifty PE on a 1 year forward, which is March 25 Nifty EPS, let's say it's around between 1,070, 1,080 rupees. Our sense is that 11-12% upside is still available on a Nifty level. So no reason to worry. Obviously, one might say 11-12% is not juicy enough. But as I said, one can always do staggered buying, staggered approach, and at the same time look at more stock specific, look at more themes. So that can help build a reasonably good portfolio. And anyways, who said wealth will be made from a 1 year? We can always look at a 3 to 5 year to make reasonable wealth, and not a 1 year.
No doubt, absolutely. Jaspreet, if I look at the various sectors that are usually focused on, if I talk about banking, we've been speaking about how PSU banks have been outperforming their private peers, at least in the near term. If I look at metals, they've been underperforming because of the China concern. If I look at IT, there are individuals that are saying that while earnings have not bottomed out, at least the prices might have. If I look at pharma, there are people that are talking about the possibility of a significant bull run because the bottom has been achieved. How do you look at all of these sectors, and which, according to you, is the biggest growth opportunity going forward?
Okay, yeah. So we largely, our portfolio built up is positioned a significant part around the 3 C's, which we call as the credit, the consumption, and the capex. And credit is obviously let's say we won't say we're choosing PSU over private banks, but PSU banks did not feature barring one odd name earlier, let's say a year back. But consistently in the last 2 years, the share of PSU banks in the portfolio has gone up for us at research and ranking. Second, overall, and it'll remain so for a good part of the current fiscal year, given clearly the balance sheets are much lighter. The PSU banks management are now coming out and talking openly about what they are trying to achieve in terms of their own targets that the board has assigned them, and they are trying to achieve them. And so it's clearly walk the talk that they are talking. And lastly, valuation still remains healthy given the ROE, which used to be high, low single digit, and it's clearly either a low double digit or a mid double digit in the PSU bank. So every reason for us to be positive on that space. The other, as I said, capex, I need not delve more. It's been talked about on your channel, all channels every day. the manufacturing theme, the defense theme. It's not a one-year phenomena, and it's going to continue year after year. Our share of GDP of manufacturing is abysmally low, and clearly there's a big move up there. The one space that we are very positive is consumption, and within that very specifically semi discretionary. And what do I mean by that? Largely footwear, luggage, retail, QSR, the exhibitions, the multiplexes, etc. That space, the jewelry, let's say holidaying, etc. I think that pocket is clearly looking very interesting. So I would say largely these three would be our dominant. Others, I would let's say a pharma or a metal or a IT or maybe even and some others, maybe more on the neutral side is how we are positioned at the current moment.
Right. Thanks, Jaspreet, for getting us those sectoral picks. A quick question in terms of, when we're talking to a lot of FIs or, fund managers, clearly a lot of them are still sitting on cash right now, both in the domestic market as well as if you talk about FIs. Say, for example, hypothetically, we were expecting another 2 to 3% correction further in terms of markets. Do you think that is something that could actually lead to a lot of fund infusion, which could then start supporting our markets? And if so, within the sectors that you mentioned, which would be your topics?
Yeah, I would believe so. 2 to 3% correction would mean let's say a slightly more correction in specific sectors, whichever be the pockets of choice, and within that, obviously the individual stocks might be correcting a little more, and that might become attractive enough for some of these FIs and long only mutual funds or funds to bite into. So I think yes, the answer to that question would be yes. I won't be able to go stock specific because of compliance reasons, but let me just highlight pockets of themes that we like. So financialization of savings is one big pocket. The per capita moving up from $2,300 to almost doubling over the next a couple of years. That would be the second one. The manufacturing theme or the China plus one plus PLI would be another one. And last one I want to leave or I want to highlight here is that pocket of platform companies, digital companies. I think that can clearly be a dark horse there. We've been selectively biting into that space in the last couple of months. And I think that's going to give a reasonable surprise. We don't have any favorites there. I think a basket approach may turn out to be reasonably okay there if one looks at that as an approach. But I can give you a quick sense. The cash flows are improving, the profitability is improving, the companies are almost at EBITDA positive, profitability almost there, or they have already announced a net profit number. They are coming out with the very important disclosures, full transparency. The ESOP quantum is going down quarter on quarter. And lastly, the environment when, let's say October to December 21, when interest rates were at low and the only way was up. Now it's the other way around, where it's only, the only way it's going to be down. It's only a matter of quarters, by when it starts. So, all these forces, I would say, combined, put together, would put this space, the digital platform companies. Obviously, the disclaimer here, it is meant for only high-risk investors. It should be meant for high-risk investors and who can take a 2 to 3 year view and obviously can stagger their buying. Otherwise, for people who are looking at, or for viewers who are looking at monthly outperformance, it's going to give bouts of volatility and maybe the best pocket to buy into.
Certainly. Thank you so much, Jaspreet, especially for that last answer, because I think a lot of our viewers will benefit from a conversation about that. Thanks as always for taking the time.
Pleasure. Thanks for having us.
Right. Now, one of the stocks, and we mentioned this at the start, we were talking about Jio Financial Services and the fact that it had a bit of a muted listing. Perhaps to a certain extent that had to do with the value that was ascribed to it and the fact that investors are perhaps not clear about what this company is going to be doing. There are opportunities in the space. And we spoke about some of those yesterday, the BlackRock joint venture, certain other aspects in terms of lending, but that hasn't panned out yet.
Absolutely. I mean, you did see the stock, right?
Yeah.
I mean, the moment it listed, the stock was locked in a 5% lower circuit at yesterday's session. And it's interesting to see that probably for the initial few days, what analysts are saying is that this pressure could continue till the time the stock actually finds its fair value as well. In fact, there's a lot of chatter on the street as well right now saying that it's mainly index funds, specifically passive funds, who have actually sold out their position in yesterday's session, Alex. So from here on, the key that we are asking is, as to what is the reason why, we've seen this kind of a muted listing with regards to JFS. Secondly, there have been no buyers in terms of JFS in yesterday's session, because during the day when we kept checking NSE and BSE, the number of sellers were probably exactly little. I think 1.25 was the last number that I saw. Those were the number of sellers in terms of JFS vis-a-vis no buyers that were coming in on that front. So that was an interesting aspect to watch out for. Apart from that, the key aspect that we're considering from here on is that what is the reason why there are no buyers? Now, is it because it's a business without capital, a capital without business, and it cannot command such high premium? The point that you just made, that it's already given a valuation, and the analysts are really not able to understand as to this valuation has to be subscribed to what part of the business, right? So there are concerns around it right now, but till the time, clarity emerges from it, from the company's perspective, as to what is it that they are going to do, because opportunities are immense, but which are the ones that they are grabbing where they will be able to create value for shareholders is what we need to wait and watch.
Certainly. All right, so let's see whether that lower circuit gets hit in trade today as well. It's not a very large number that is there, but that lower circuit is in fact only 5%. So it could very easily be hit today as well. But let's focus in on a few stocks that are going to be in focus on account of being in the news, and there are quite a few of them. We've got Varsha first that is joining in to tell us some of what she's got. Varsha, good morning. What's on your list today?
So a bunch of companies that one should, look out for. The first is RITES. Actually, this is a project management consultants to railways. Now, the company has signed an MOU with state-owned hydropower giant NHPC. Now, leveraging its core strength, RITES as a project management consultant will provide comprehensive and efficient solutions for developing rail infrastructure and allied facilities for NHPC. Then we have Lemon Tree Hotels. Now, this hotel chain has signed license agreement for 2 properties in Bhubaneswar and Kasauli under the brand Lemon Tree Hotel and Lemon Tree Mountain Resort respectively. Now, the hotel in Bhubaneswar is expected to be operational by Q4 FY25, while Kasauli will be operational by Q3 FY26. Then we have BLS International, wherein the company's subsidiary BLS International FZE is in process to subscribe 100% share capital of Saudi Arabia-based BLS International Travel and Tourism. Then we have Tata Power. Now, Tata Power has been in focus because of the EVs and the infrastructure related to EVs. Now, the Tata Power Renewable Energy Limited, a firm that delves into renewable energy sector and a subsidiary of Tata Power, has signed a power purchase agreement for 9 megawatt peak on campus solar power plant with Tata Motors Pantnagar plant in Uttarakhand. Now, this solar plant will be the largest on-campus solar facility in the state. Also, the solar installation includes an effective approach towards Tata Motors' sustainable future goals with an estimated carbon emission reduction of CO2 per kilowatt power. Now, 25 tons of CO2 per kilowatt power. Now, in an earlier partnership, Tata Power Renewable Energy Limited and Tata Motors successfully established a 7 megawatt peak solar project at Pantnagar manufacturing facility. As a result, Tata Motors Pantnagar plant's combined solar capacity now stands impressive at 16 megawatt peak. The last one that we have is Glenmark Pharmaceuticals. Now, there was this case against Glenmark Pharmaceuticals USA wherein charges involving historical pricing practices of a generic drug, pravastatin, between 2013 and 2015. Now, for this, company has entered into 3-year agreement with Department of Justice to resolve all of its court proceedings. If it adheres to the terms of the agreement, including the payment of $30 million payable in 6 installments, the DOJ will dismiss the pending superseding indictment.
And that could be leading to some I mean, it is positive, but let's see how
But
the
that amount,
outflow,
right.
because it'll almost come up to around a little over 200
Sure.
crores, right? So what that impact on the
not a
balance
small
sheet and the
amount, yeah.
P&L will be is what we need to wait and see. Thank you, Varsha, for getting us all the other details. But apart from this, you had Adani Group of companies that were in focus from Friday, Monday, and today as well. In fact, there has been that positive momentum that we've been seeing. Himansh is standing by to give us more updates in terms of what's brewing and what are the other stocks that he's been tracking. Good morning, Himansh.
Right. Good morning, Hiral. So, despite the relative quiet from the earnings season gone by, there are some key developments the viewers should watch out for. So, with Adani, like you mentioned, the Campus Trade and Investment, which belongs to the promoter entity, has bought 2.5 crore shares, which represents a little over 2% of the Adani Enterprises. Now, this purchase was made from August 7th to August 18th, and as a result, the promoter shareholding will rise to about 70% in the company. Then Adani Power, in their investor presentation published yesterday, it illustrated plans for growth. Now, notably, the Adani Power has a target of 21,000 megawatts by FY29. Now, this includes proposed inorganic capacity, which is targeted at around 1,100 megawatts, and the current capacity currently stands at 15,200 megawatts. And as far as the brownfield expansion projects are concerned, around 3,200 megawatts of capacity is proposed, while 1,600 megawatts of capacity has been committed to already. The net senior debt, which is the net debt of the company, has risen from 24,350 crores in the previous year to 27,000 odd crores this year. But notably, their debt to equity ratio has come down significantly from 6.51 in the fiscal year 2020 to 1.18 in the last fiscal. Then Ambuja Cements and Sanghi Industries have another development to watch out for. Ambuja Cements has made an open offer to acquire 6.7 crores of Sanghi Industries, 6.7 crore shares. Now, the offer price is set at 114 rupees per share, and this aggregates the entire the total offer size at 767 odd crores. This represents 26% stake of Sanghi Industries, and the offer opens on September 29 and is expected to close on October 13. Now, assuming complete acceptance of the offer, the shareholding of Ambuja Cements and Sanghi Industries will increase up to 83%, almost. Welspun Industries has acquired 50.1% stake in Michigan Engineers. Now, the stake purchase was done from Autumn Investment and Infrastructure and Sansar Housing Finance. And the consideration for this acquisition came up to about 137 odd crores. The acquisition aligns with the Welspun's strategy to expand into the high margin water infrastructure business, which also has promising growth down the line. The current order book for the segment of the company in this stands at around 6,000 crores. Brigade Enterprises also has entered into a seal deed for acquiring 6.5 acres of land parcel in Chennai, which is to be used for a residential project. And lastly, there's Union Bank of India, where the committee of directors have approved a QIP, where they are expected to raise funds of up to 5,000 crores through issue of equity shares, and the approved floor price is set at 91.1 rupees.
All right. Thanks so much, Himansh, for all of those updates. Adani, a group of companies, as you were pointing out, was buzzing yesterday. Particularly Adani Ports was up over 4% at one point, if I'm not mistaken. We've got Rishi joining in to talk about the latest development of the primary markets. Aeroflex is the company we're talking about today. What can you tell us about it today?
So Aeroflex's IPO is opening today, and it's an IPO with a size of 350 crores. And the issue is coming at a price band of 102 to 108 apiece, and the offer closes on August 24th, which is day after. Now, of the 350 crores, 162 crores is a fresh issue, while 189 crores is an offer for sale done by its promoters, which is SAT Industries. Now, Aeroflex is in the business of manufacturing stainless steel corrugated flexible hoses, both with as well as without braiding, interlock hoses, as well as other related end fittings that come. So together, they term this their product as flexible flow solutions. Now, its revenues are primarily driven by exports, which account for about 80% of its overall revenues, particularly if you look at US, which is its largest market, accounting for about 30% of its revenues. The company also plans to use its fresh issue primarily for funding its working capital requirements to the tune of 84 crores and another 32 crores for repayment of outstanding borrowings. The rest will be used for general corporate purposes as well as for pursuing some unidentified inorganic opportunities. Now, if you look at this previous fiscal financials, it had a margin of 20% and a PAT of 30 crores at a revenue of 270 crores approximately. But among other data, the interesting aspect is the interest that is shown by marquee investors like Ashish Koshalia, who have picked up stake even prior to the IPO. As well as yesterday in the anchor investor segment, the company raised about 103 crores with participation from funds like Nippon Mutual Fund, Invesco Mutual Fund, as well as SocGen that participated in the anchor investor segment.
This is going to be interesting as well, with interesting names, as you mentioned, like Ashish Kacholia, Jagdish Master, all of these names who have entered the company as well ahead of the IPO. The anchor book also looks pretty strong, so I think listing is going to be interesting to watch out for. So I think whole host of things that we are watching out for. Thank you, Rishi, for getting us the details. But clearly, from a gift nifty perspective as well, right now, a slightly muted start, Alex, is what we are anticipating so far. And clearly, if you go to see, it is a day where we will see heavy stock specific action as well. In fact, that's a wrap from Alex and myself. Lots more lined up on BQ Prime. Please stay tuned.